Hello, and welcome back to Investors Heaven. Many of us want to buy mutual funds or index funds, and we don't know where to look and how to locate them, like which ones are doing well and which ones are not, which ones should I buy and which ones should I avoid buying. And so I have created a video that I'm explaining how to pick index funds and mutual funds, generally speaking, from Vanguard. So if you're investing with Vanguard, and you can find the link to the video here if you want to watch that later. But if you're actually using Fidelity as your broker, how do you actually find these awesome funds that you can potentially invest in? And there is a very nice tool here in Fidelity, which is called the Fund Screener, and I'm gonna leave the link below in the description. So check that out if you want to take a look. And you can actually examine the funds that Fidelity offers and see which ones make sense for you to buy. And the way we're going to do that here is we're going to select a key criteria that just the Fidelity funds over here. Don't use the fund picks from Fidelity because we can pick on our own. And also use a management approach of index. We don't really want active because active tends to have a higher expense ratios, so you're paying more for the supposed privilege of having someone manage the fund. Now the thing is, most mutual funds, I think it's like 88% of the funds never beat the market, and the ones that do tend to do it in a short period of time, like they don't have a very high track record when you compare them to the S&P 500 index, which is basically the baseline index. So whenever we compare a mutual fund or an index fund, we always compare it to the index, the S&P index. So we're going to select index here, and then we're going to view the 61 funds that make sense. Now, if you go active here, you'll see that there's 250 funds, and you can take a look if you really want. But for the purpose of finding low expense funds, which I think makes much more sense than actually picking ones that are managed. I never bought a managed fund personally. I'm gonna go index here, and so we're gonna view the 61 funds here. The first thing, the most important thing that I sort with when I see this screen over here is not the life of fund, which you would expect, because we want the life of fund to have, we want the fund to have awesome gains throughout its life. However, we want the fund to be at least 10 years old and more than that, actually. So we don't want newer funds like these ones. I immediately exclude those. Why do I exclude those? Because these funds are actually benefiting from the current market. Like the market has been going up and up and up and up. However, we want mutual funds that have gone through 2008, for example, where there was a crash. So we want funds that have actually witnessed a bad period of time when the market is concerned and a good period of time. So we want basically the full cycle to have come through the funds should have gone through the whole thing. Now we can always examine details about the funds, but again, I'm always initially the first thing that I do is sort with a 10-year option here, and yeah, if they had more, that would be even better. But let's take a look at the first one, which we are seeing that throughout its life had 13% for a gain, which is awesome, and 20% in the last 10 years, which is also pretty great. Remember though, the last 10 years have been high flying. I mean, the market has been doing awesome in the last 10 years. So bear that in mind. Now we'll see here that the expense ratio is 0.3 almost percent, which is a little bit higher than I would want to, but definitely I wouldn't just ditch this one just because of its expense ratio. So this is still a potential buy. And you can see that the top 10 holdings here, like the almost 45% of the portfolio, consists of tech companies. So this one is actually the composite index fund, and it's a Nasdaq fund. So it actually tracks the Nasdaq index, which is basically the tech index. And that's why you're looking at a lot of tech companies here. So this is the reason. And you can see here again the track record of the company, how well it has been doing over the years, and also examine hypothetical growth of $10,000 as years progress. And you can see obviously details about each year over here. and for 1 year, 3 years, 5 years, and basically discover how well the fund has been doing. Now the important thing, this is, as you have seen, like it's a large growth fund, so it consists of large, like massively growing companies basically. And the inception of the fund was 2003, so it went through the crash, which is very nice to see. So that's a pretty important thing. So if you held through that fund for since 2003, which is more than 15 years, you would have done really well. So this is, and again, these are some details about what the market has been doing over the years. And you can find some things like ratings here, which I don't really care about. But yeah, you can see that this is basically, this actually consists of some other companies as well. So yeah, so the Nasdaq Composite, yeah, so this is the Nasdaq here, but it consists of some consumer discretionary, communication services, healthcare. For the most part, it's information technology, as you would expect. And yeah, you can see some details here. So this is a fund that I would definitely hold. And remember that this one is mostly United States based, which I'm fine with. The vast majority of my investments are United States. The market is, generally speaking, pretty stable. And yeah, this is definitely a fund that would be very, very interesting to potentially hold. And its ticker symbol is FNCMX. Now we can take a look at some more funds over here. So for example, the 500 index fund, which is more than likely an S&P 500 fund, which, as you can see, the expense ratio is very low. These kinds of funds tend to have very, very low expense ratio. I think generally speaking, the Vanguard one has 0.04, if I'm not mistaken, or 3, but it's a very minor difference. And likewise, yeah, you see here big tech companies that you would expect, but also you see like Berkshire Hathaway or JP Morgan Chase here. So yeah, this is basically the 500 index fund, but this goes back to 1988, as many more years. So for me personally, because I like to see that, I like to see the fund inception that goes that far, and that old basically, it goes that way, so much back actually in time. I can see here that the gains are also pretty awesome. Like if I were to be making 16% every year since 1988, that's fantastic gains. And remember, you can always do the 72 rule. So let's actually do that quickly. So 72 divided by 10 and 16 over here, about. So every 4.5 years, our investment would have doubled if we were holding this instrument over here. So do the math here. Since 1988, how many 4.5 years are there? Like 5 cycles or so? So each cycle your money would have doubled if you held through the last, and that's like 10 years. I would kind of want to say that like 20 years, of course, or 25, how many that is. But on average, I'm sure it's probably maybe 13 or 14 or so. So yeah, this is another awesome fund to hold. And you see, you get the idea here, right? I mean, this is how we approach examining the funds here. And again, we can take a look at the total market index fund, which is basically the whole stock market index fund, tries to mimic the whole stock market. And obviously there is, as you see here, this is like 22.92% of the portfolio instead of the previous 45%, because this index fund tries to mimic the whole market, so it has to hold way more stocks. This is the reason why. And this fund has also been performing very nicely, with a very low expense ratio and pretty old fund inception date as well, which is very nice to see. So yeah, we can keep examining more funds over here. You will see that an interesting one, for instance, is this one, the Extended Market Index Fund, which for the life of the fund has 9.3%, and expense ratio is negligible. The inception is also kind of old, but this is mid cap, so with these kinds of companies you have to be a little bit careful, because some of them can be a little bit overvalued. So, and this fund also seems to be holding a lot of these companies, but you'll see here it's like DocuSign, Airbnb, Twilio, Zoom. So it's like companies that are growing and growing and growing, But in the current stock market environment, a lot of them tend to be overvalued. So be careful when you're holding such a fund, or when you decide to hold such a fund. Could be okay, of course, but make sure that you are not overdoing it, unless you really believe that there's gonna continue being a craze around the stock market like forever, which I don't think so. And then again, there's like mid cap, small cap, multi-asset index fund, and all that. So multi-asset may be an interesting one. Mid cap and small cap is like mid cap companies, mid capitalization basically. That's about the market capitalization of companies. And it's like a fund that tries to mimic this mid-size market capitalization companies really as holdings for the fund. And yeah, this is a combination of funds basically, as you see here. So it allocates to domestic, international. That may be an interesting one to hold as well. Although generally speaking, I'm not a huge fan of these kinds of funds. And but if you want to have more diversification, it may make sense to hold things like the international stock market, for instance, and other type of bonds and investments in bonds and stuff. I'm not a big fan of bonds as well in this environment, because I think that you're basically losing money just by holding bonds right now. Who knows? Maybe if there's inflation, that would make some more sense. But for now, I wouldn't do it. And so yeah, this is basically how you can go through and discover funds that are interesting for you and your portfolio. And always notice that if you see things like funds that let's say like this fund over here, this doesn't even have a 10-year period um, track basically, just because it has been operating for less than 10 years, and this one is actually a retirement fund till 2060. So you have to be a little bit careful about these funds. It's again, generally speaking, like this one for instance, you are seeing here 25, 29, 25, a 23% average. But if you take a closer look at the inception date of this one, you will see that the inception date was 2016. So it was like 5 years ago. You can't go by that. I mean, this last 5 years, the market has been ripping. This will not keep on happening forever. So don't be careful of the survivorship bias. Like don't just look at the performance. Just make sure that the performance is also long lasting. Very important with index funds. All right. So hopefully that helps you a little bit with discovering nice funds for your portfolio. And if that helps you, and you got some ideas on what to invest in terms of your index funds, leave a like, because that helps me a lot. It helps me grow the channel. And if you want to watch more videos that I'm gonna be making in the future, or the ones that I've made in the past, you can always subscribe and come back, and I'll be glad to host you. So thank you for watching, and I'll see you next time. Bye bye.